think it's not only investors who have round-tripped big gains, but in this current correction environment that we have seen, a lot of investors are thinking, oh, these stocks are on the cheap. They've done well in the past. Now they've taken a big haircut. So
Sure.
now's the time for me to get into it. But you really want to be focusing on that new leadership, because those who didn't at the beginning of the year, with the cyclicals and the industrial names, they have gotten left in the dust, really.
So well put. When I joined IBD in 1999, we were in the thick of the dot-com bubble. We had a lot of lawyers, a lot of dentists, a lot of radiologists, a lot of successful business people feeling very confident and maybe even to the point of hubris in buying their stocks and then buying them on the way down, like Nortel Networks or any other top tech stock that peaked in late 1999, early 2000, bought on the way down, mortgaged their house, bought more shares, and eventually went bankrupt. And we just don't want anyone who's an
Hmm.
active investor to ever fall in that trap of letting hope rule your portfolio. So here again, in terms of managing your emotions, you might see on a chart, Ali, that the stock has just dived 25%, and you think, "Gosh, what a bargain!" Right? But every stock can go to zero, which would make that 25 discount, that percent discount, very, very costly. So on the other side
Hmm.
of hope is the much better emotion of reality or realism. Make sure that, when you buy any stock, you know that every stock is risky and you expect the stock to be making money. If it's not, now you're hoping that the stock will come back to allow you to break even. That doesn't always happen.
Yeah, you're exactly right. That's not a trap that we want to be in. Okay, so now that we know what not to do, let's focus on what we should do and how we do spot and uncover that emerging market leadership.
Let's do that. Yes. So, well, the one thing is to have a regular routine. We love to screen for stocks that have strength and fundamentals in their technical action. Just a fancy term for how well is the stock price uh,
Hmm.
holding up, especially amid a correction like what we have right now. And is the stock getting accumulated by institutions? Very easy to see that with a good chart. If it's going up and you see the volume bars on those up days being bigger than the recent down days, or they're well above our 50-day average line that we actually draw on the volume chart, then you're spotting a stock that actually might become a big winner. Second is also be aware of the market cycle. You're
Hmm.
definitely going to do better in the market if you focus on times when we are in a confirmed uptrend. And every major bull market since 1900 featured the same exact kind of signal in which greed, a good kind of greed from the institutional crowd, came over to overpower the fear, caused by sellers. So one, screen stocks. Two, make sure the market is now in the beginning innings of a nice strong rally. Identify the leading industry groups and sectors, and then use charts to pinpoint your price in which the reward risk ratio favors you.
Yeah, I really like your point about having that consistent routine, because it's that regular screening that
Hmm.
helps you uncover these trends and spot that rotation. If you're looking at industry group charts, you can see, okay, has this group topped, or is this a group an up and coming group? Is it increasing in the rankings? And that's something that we definitely like to see and like to take note of. Is it staying in the top rankings of the industry groups, but whether it's the top 10, 25, or even 50 groups? Am I seeing
Yes.
setups on an individual basis as well? Some of those things are also helpful before you dive in to the individual chart level.
Let's start with one thing we both were talking about, which is the strength of a stock. And we have a relative strength, an RS rating from 1 to 99. So easy to use that, your grandkids or your children could use it. And basically focus on those with an 80 or 90 RS rating. And because of the constant innovation that we've done with MarketSmith, Now we also calculate and display the 3-month relative strength rating, the 6-month relative strength rating, because we notice that, our 30-year plus 12-month RS rating can be kind of a laggard when the stock is finally starting to, come out of the doldrums and break out. The RS rating might be a little bit too low, might be below 80, but now we have those tools that help you identify this sudden change in character. So that's one place where we screen.
Hmm.
We don't use our opinions, but we use the facts presented by the market. Look for those stocks that are already showing strength and then ready to rip to new highs, shall we say?
Exactly. Yeah.
Yeah, because the market has now shifted. Remember,
Hmm.
3 out of every 4 stocks, maybe 5 out of every 6 stocks follow the general trend of the market, uh,
Hmm.
and that's for the upside and the downside. I was shocked, everyone, when I did post analysis of the Great Financial Crisis, 2008 to 2009. That bear market flattened the S&P 500 nearly 50%, the Nasdaq similar,
Hmm.
and utility stocks, they didn't hold up. They were down even more. If you look at XLU or look at your favorite utility, they got hammered too. So we want to first of all respect the market. The market is always right, and then from there we look for that, those pockets of leadership.
Yeah, which I think has made the current market environment so tricky. It's almost been like a tale of two markets. We have this
Yeah.
correction, and we have growth stocks that have been in bear market territory for over a year at this point. From the top,
Hmm.
a big decline by and large for many growth stocks. So it's been a good stock pickers market with the backdrop of this correction, and all this theoretical stuff about screening and relative strength line is great. But let's now put it in a practical sense and talk about what we
Hmm.
did see at the beginning of the year, Dave. And so let's take a look at XLE. This is the Select Sector Spider ETF tracking the energy sector.
Hmm.
And right at the very beginning of the year, we saw an entry into this group. So a signal of rotation into energy stocks. And I mean, this has been, the number one theme this year. So we were able to uncover this emerging leadership right as the year kicked off. So can you talk a little bit about how we were able to do that?
Well, absolutely. One is we're always filtering the news and giving us a clue as to where the big money might be flowing. You see that XLE is basically a collection of various oil and gas exploration companies. So it might move a little more slowly than some of the real hot rods in the sector, but you notice that when the stock traded between 58ish to 51, that was a pretty uh, shallow decline after a nice run up prior to that. So we had a move from the lows, yeah, 44, 45, 46 up to 56, 58. Yeah, that's a pretty nice move. That meets our general criteria of looking for a prior uptrend of 30% or more before the stock goes and takes a break. We call that a base in a chart, and then breaks out of that base, meaning it gets through all of the overhead supply of those who might have bought at higher prices and are waiting to sell the break even, and just they're exhausted holding the stock while it was a losing stock or ETF, but then move on heavy volume following that nice volume dry up in late December. This is such a great example too, because I've noticed that in many years the best stocks or the best sectors often get going right on the first week of the year, and that was the case here. It wasn't like crude oil was at 40 and January 1st, and then now we're at,
Hmm.
100 110 or whatnot. Crude oil was already strong, right? Crude oil was already making a move prior to this breakout here. So in this situation with a flat base meaning just sideways movement after a nice uptrend, no more than a 10 to 15% decline from high to low. We use intraday high, intraday low prices. We simply tack on 10 cents above the highest price in the flat base, or if the base is long enough, we'll draw a trend line across the declining tops and identify a slightly lower price that you could consider getting in. I use both. I use the standard breakout lines, the
Hmm.
prices, and I also use the trend line breakouts depending on my level of conviction and my feel for the market. Now you can see that in this chart. it really kind of never looked back, Ali. Just one test of that green moving average, which is a 21-day exponential. Uh, our good friend Mike Webster, who was a longtime money manager for William O'Neill's uh,
Hmm.
in-house money management firm, came up with the concept of looking at the 21-day exponential as a sign of whether a stock after the breakout is healthy or not. And you can see, as you pointed out, there are two healthy tests of the 21-day en route to now a 33% gain in the ETF.
Yeah. And we don't have a crystal ball to know how much more room this theme has to run. But the earlier that you can get into something like this, I think once it became a little bit more obvious, then
Hmm.
it became harder to pick the leaders, or even if you wanted to get into XLE to be able to withstand those shakeouts, that would have been more tricky. But the earlier you could get into that theme, the easier it would be to handle some of those wiggles on this way up.
Absolutely. Oil by itself is such a volatile
Yeah.
commodity. Yeah, and I wish I had as much success in the oil and gas stocks as those who bought XLE right at that breakout.
Yep.
But you make such a good point. Being really good with your timing. To I would also say, being disciplined. Don't chase a stock just because you've seen such patterns in the past. No pattern is guaranteed to work, and you have to be flexible in that way. If the breakout doesn't work, well, we have a very simple solution. Just cut it loose, save your capital, live to fight another day, hang your ego at the door, and you'll be in this game a long time. Especially if you're new to this.
Mhm.
But that XLE is a great example. Now people are wondering, well, could you take some profits? Absolutely, take a little bit of gain, but at the same time, keep in mind that this move in the
Yeah.
market right now isn't likely to end tomorrow.
Yeah, that's a good point. This is a theme we could see continuing. Maybe we are in year one of an 18-month move. That's something that we've talked about
Yeah.
before, the potential of in on IBD Live, but you still don't want to chase, as you mentioned. Now, something else that I want to talk about is this isn't the only theme that we've seen this year, and it's
Mhm.
not only charts that can help you identify these themes. If they're critical, don't get me wrong, they're critical to what we do, but also if you take a look at the macro backdrop, what's going on with interest rates, that can be one tip to helping you uncover leading groups too.
I think so. I think the bank stocks were a great example of how they led while the techs took a long break in 2021 because it was clear that interest rates are going to be rising. And now we're going to see the fruition of that next Wednesday. The CME, Fed funds futures markets already predicting a 25 basis point rate hike. But keep in mind, the market already has discounted that. The market always looks 6 to 12 months in advance. So that's why you had companies like GS and JPM and WFC and even related ETFs like KRE make nice moves in 2021. This year, why aren't they doing as well? Well, we've got war, we've got global recession risk. We've got the possibility that the Fed might not be able to normalize monetary policy as quickly as they wanted. And we also have the fact that we have inflation, major
Mhm.
inflation. That also hurts lending.
Exactly. So, just some macro themes to keep in mind that can help you uncover what those leading groups are as well. And now let's tackle for a little bit before we get to some viewer questions,
Mhm.
how to get our watch list ready for the next uptrend. This is something that we've talked about a little bit sprinkled in throughout, but we want to be focusing on where the strength is, looking at those relative strength lines, looking at stocks and uptrends, looking for the leading groups and the leaders within the group. So, can you talk about that?
Yes, I would say first. Well, we have a product called Leaderboard that currently has free access week through the 13th, and that's one immediate way to get your watch list up to speed because a team of us actually curate the list in terms of those that we think have the potential to make market-beating gains. And for a long time, since its inception back in 2011, many years, we've doubled the return on the S&P 500. That product also has the IBD 50, which is computer generated and currently shows a lot of stocks in the industrial and energy, metals areas, but it also it shifts like the wind. And just 2 years ago, it was almost all semiconductors and internet software, some retail, consumer discretionary in there. The IBD 50 and the Big Cap 20. The Big Cap 20 is our weekly list that actually I designed 20 years ago. Oh, not 20 years ago, almost 20 years ago. It feels like it. Uh, but Big Cap 20 currently also features a lot of those oil and gas plays that have done well. Any company that has a market value north of 15 billion, strong fundamentals, excellent relative strength, that will make the list. We also have our stock research tables that identify first off which sectors should you be leading, should be leaning into. And right now it's agriculture, energy, metals, and some utilities as well. Actually, right now, but that will shift as well. So those are some things I like to do, as well as just listen to other accomplished investors and traders, whether it's through IBD Live or just recently, I enjoyed Jack Howe's podcast on Barron's Next, and he's a very good senior markets writer for Barron's, and he had a great interview with the CEO of Devon Energy and why the outlook for crude oil prices could stay strong due to inflation, the capital requirements, the investor expectations on oil and gas companies. The more I soak in those kind of like insights from uh, interviews by people like Jack on CEOs of leading companies, the more I usually can create a really winning thesis for long-term gains.
Yeah, that's so true. And let's go ahead and take a look at DVN, shall we?
Yeah,
It seems like for the next entry for this stock, it has pulled back around the 50-day or 10-week line several times. So, me personally, with the move that it has made, I would like to, at the very least, see another pullback to the 50-day, if not a full on base structure. But with the group just off to the races like it has been, I mean, yeah, trying to find an optimal entry point here can be a little tricky, but there's no
sure.
doubt that DBN is one of the leaders in this area.
It is, and this is a large cap, 39 billion. We have even bigger companies out there. Look at Chevron, CVX. This was another surprising winner, helping to move the XLE, because you can see it
Yes.
broke out, past resistance around 119, 120, and that was after a nice test of that 50-day alley, near 110, just a few weeks before January 4th. So. This one clearly is way extended from any IBD style buy point, but I would definitely keep an eye on it for a future pullback to the 10-week line. Uh, I unfortunately don't have any current examples of some energy names to look at. Let me think here. One that's on leaderboard, LNG, is Cheniere Energy, a expert in liquefied natural gas. And this one is on leaderboard. You notice that it briefly hit that 20 to 25% profit zone after a breakout past 113.50. One little shakeout after that breakout, but it held at that 50 days. So one could have afforded to be patient, especially if you're
Hmm.
looking at a weekly chart. It actually finished pretty strong on a weekly chart. Now we are in position to watch for either a bounce off that 21-day exponential or a bounce off that 10-week line, and that could offer you a secondary buy point. One thing we didn't mention, Ali, too, during this
Hmm.
episode is that look at that blue line that's just going up at like kind of like a 1 o'clock angle on a clock on a wall. That is the relative strength line, which gauges how well the stock is doing versus the S&P 500. On MarketSmith, you could actually customize that benchmark to the Nasdaq 100 or
Hmm.
any other the Russell 2000 or other indexes if you like, but we like to use S&P 500, nice, broadly diversified index. You can see that thing is rising so fast, meaning that LNG is clearly outperforming a market-beating stock. So as long as that RSI continues to keep that strong uptrend, maybe you'll feel more courage and confidence to buy it on the next pullback to the 10-week line. Maybe this LNG story is going to be a multi-year story now that Germany and the rest of Europe have to deal with a belligerent Russia, which supplies so much natural gas.
Okay, Dave. So I think just to sum it up, before we get to some viewer questions, we don't
Sure.
want to be focused on the leaders of the past. We want to be focused on outperformance. That's the whole reason why we're picking stocks in the first place, right? We want to
Yeah.
outperform. So make sure you're not holding on to those leaders of the past or trying to buy them after they've come off so far from their highs. We want to be focusing on stocks in leading industry groups. So look at those industry group rankings that are in uptrends and setting up in proper chart patterns. We don't want to chase stocks that are extended, but by utilizing charts, we can pinpoint proper entries for stocks in leading groups as they are starting to run.
Yes, and whatever chart you use as a trader or individual, be aware of the average volume for that stock or ETF over the past 50 days. That's our standard. I know other charts use 20 days or 10 days. We prefer 50 days because then when you see a spike 100%, 200%, 400% above that 50-day average for the volume, share volume, then you know that maybe a change in character is afoot. And maybe it
Mhm.
is time to be locking in gains. Maybe it's time to be buying a stock.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.